I'm looking for people that are not just brilliant, not just obsessed with making a difference, not just obsessed with the product, but have the ability to, when it fails, when it doesn't work, to think in terms of decision trees, to dust themselves off and go at it again. That is really important.
If you plan that you will be launching the new services, it's important that your current consumer base loves your products. Because if your current consumers don't love your products, then anything new will launch, this is going to be a disaster, right?
The guidance I would give people is it's okay to change your mind. You can't change your mind on everything all the time or your team will spin.
That's why I care so much about velocity, because I just believe that if you iterate faster, you will learn faster and you will get to the right answer faster, because the probability that you get to the right answer on the first try is generally just low.
Hello everyone and welcome to Fintech Leaders. I'm your host, Miguel Armaza. And I'm a co-founder of Gilgamesh Ventures, a fintech venture capital fund. If you enjoyed this conversation, I invite you to leave a review on Apple, Spotify, or YouTube so more people can learn about fintech leaders. Today, I bring you a selection of some of the best and most popular episodes of 2024. The guests of this episode are amazing. They have either founded or held key leadership roles for companies with a combined market cap of $200 billion, including Capital One, Kaspi, Mercado Libre, and Xero. It was an amazing year for fintech leaders with 42 new guests from 13 countries. Our interviews were viewed almost 3 million times and we reached people in 184 countries. Thank you for tuning in for what was an amazing year, and I'm excited to bring you a 2025 full of rockstar business leaders. First, we have Mikhail Lomtadze, CEO of Kaspi, a multi-billion-dollar company traded on the Nasdaq and the leading tech platform in Kazakhstan.
For any innovative company, if you plan that you will be launching the new services, it's important that your current consumer base loves your products. Because if your current consumers don't love your products, then anything new will launch, this is going to be a disaster, right? They're not going to be adopting you. It's almost like in life, right? If you respect me as an individual and I will reference somebody to you, you would expect that somebody I reference is worth it, right? So it's the same in life. If there are 3 people sitting at the table and they hate your products and they're also suddenly you're launching another product, these guys are going to basically not use this product. They're not going to reference to each other. And actually they are going to spread negativity. So we focused on the quality of the products. That was probably the most important. Alongside the super app strategy, focusing on the products, quality was extremely important. And we basically reorganized our corporate culture. We killed all the financial incentives and the sales incentives on the product development side. So in our company, very few people have sales targets or financial targets, but we have targets, and now it's not the target, it's the DNA, that the quality of the product has to be exceptional. So we defined our mission that we want to improve people's lives. Once we defined this mission, we always like to measure things, and we had to come up with metrics which would measure what does it mean improving people's lives. And improving people's lives metric, we decided to use Net Promoter Score, just because we like the concept of you would be asked whether you would recommend to your family and friends, and we thought that's a powerful question. And we basically launched the Net Promoter Score across our company for every product. If you take today's perspective, we are measuring the quality of every individual service and product by surveying roughly about 300,000 people every month. So we have wide range of the product, and every product has a Net Promoter Score or the quality score. You have immediately feedback ranked like top 5 or top 10 positive, things to improve. And every individual team that is responsible for the product development can actually listen to those calls, read the reports, and come up with ideas how things can be improved so that Net Promoter Score and quality is increasing. And that has been now the biggest priority across the company. We do sort of customer survey and research. It's not research, it's really actual feedback on the product usage, which is a bit different. We do it differently than others. So for example, when I'm mentioning 300,000 consumers, we will actually talk to people. So it's not like email, when you just get an email and only 1% of the people open it, and you don't know what another 99% of people think about your products. No, we actually are personally approaching the consumers. We're calling, we're recording those calls, and then the product teams are sitting through the feedback, through the calls, and then they are prioritizing some of the features for improvement. And they're planning these regular product releases, we call them. Usually product releases from 3 to 6 months, depending how complex the feature is. And this is really sort of the constant improvement, never-ending feedback. This is the beauty about building the business, which is customer-oriented. You can do whatever KPIs eventually, but if you get to the stage when you're listening to the consumer, you can prioritize the feedback and you can prioritize the tasks and measure them by the customer quality, this is the key. And we are very successful financially, but no one has financial targets. So that's also another important characteristics of our corporate culture. When we were thinking about the super app, single purpose mobile applications were in fashion. So that's number one. Number two, nobody in the world has really done anything similar. So that was kind of groundbreaking, the strategy itself. The marketing specialists or consultants, they can hardly imagine that somebody would place the savings account and buy kitchen accessories in a one mobile application, right? So everybody would say you need to have a different brand, you need to have different this, different that for every product. And then developers also, people in generally don't have an inclination to coordinate. So engineers love to have their own product, which just it doesn't depend on the other. So there was a lot of security features and things like that. There was a list of justifications why we need separate brand and separate app for every service, and why having one app where everything is integrated was a bad idea. But our mission is to improve people's lives, right? So counter explanation of it was, we are in the business of making our consumers' lives easier and not our own life. So let's forget about the challenges. We'll solve them. We have an incredible team. We're going to get it done. For a consumer, can you guys justify why a consumer needs to download every app? It's not convenient. Yeah, everybody agreed. Why we need to have different brands for different products? Consumers will be confused. There will be no identity for the company. Companies like Apple have a single brand. People expect Apple to produce a car. That's the brand we're going after. We're not going after brand which is dissected into different brands and confusing the consumers, and it will be expensive to maintain. So from a consumer perspective, it made total sense. And I think we were just brave enough to make that decision when nobody else was doing that. And from today's perspective, that was probably the most important decision we have taken. Super app, which integrates everything in a single mobile application.
Next, we hear from Diya, Chief Product and Technology Officer of Xero, a publicly traded $26 billion giant that offers accounting software for small businesses worldwide.
There are lots of tensions, right? There is features that get you quick wins versus features that differentiate, like copy features versus features that differentiate. There are features for current customers versus features that will get you new revenue. There is how much should you launch versus how much should you spend on making sure your platform is stable. There's how much should you spend on making sure your platform is stable versus how much should you spend on making sure your platform has the latest tech. Because while you may not see the benefits today, there'll be benefits tomorrow. There is, should you build to close that next deal, but it's only for this one customer, versus should you build for the masses? When have you done enough? When do you switch? You start with an MVP, you develop it, but when do you go, okay, I'm now going to thin out this team and move people over to this other team because this product is reaching more maturity, whether it's from any of the angles I mentioned, whether it's infra, whether it's newness of tech, whether it's customer facing features, right? So I think those are the big tensions. And then I think, how do you listen to all the different cohorts? To your point, marketing wants something different, sales wants something different. Engineering, I think most good, because if you're a PM, you really, and this is my belief, right? You and your CTO should be able to step into each other's shoes. And that's what makes the best partnerships. And really, you can't say a CPO is not responsible for stability or the newness of the tech, because they won't, eventually in a year, they won't get what they need, right? Like you're not building for customers where things go down all the time. So I think that's less of an issue. And then, so I think there are a number of different tensions you have to balance in a number of constituents. In absence of any other constraint, making your product better is always a good thing, right? Having the best product out there is always a good thing because somebody else will develop it. And so yes, in the absence of any other constraint, cannibalizing your product is the right thing to do. On the other hand, you have some real live world constraints, which is there is a certain part of your product that is already being cannibalized or is not selling as well. Where are you going to put your limited resources? There is a part of your product that is you just launched it, it's fantastic, but it needs to mature and get to V2. Where are you going to put your resources? You have, forget the resource constraint. Your P&L might require you to cannibalize at a slower rate if you're a public company, because public companies do have a responsibility to shareholders. Then you might want to cannibalize that. In general, though, I think any of these hold for a short period of time. If you truly sit on your product and go, I am not going to move it to the next level, and that's not going to be the best product, I think in tech, in 2 years, you're going to have a problem on your hands. So I'm very much in the, you have to make sure, if you have to cannibalize, you have to make sure it's the best product, but you have to do it in a responsible way, because it's not the only decision you face. I think you have to have some level of information. I don't believe you ever need to have 100% information, because I think that the returns of that information is, I just don't think, I think the ROI of that information starts going down, the marginal returns. I strive for, it's hard to put a percentage, but I strive for like somewhere around 70 is what I'd say. Percent information. What I mean by that, how do I know it's 70%? If I can understand the problem and the different levers of the problem, right? And I can draw a tree that goes, if I had all of this information, here is what my decision tree would be, right? If I can get to that stage, I don't need the data on the trees. It's great to have the data on the trees, but then you can start boiling down. Then you can start going, okay, what's the probability that this tree, like that this situation is the right answer based on what I know? What's the probability here? And then you come up with the probabilities and the estimates of the impact based on your experience, your team's experience, trends for other data, etc. Right? And that's how you make decisions. So I'll give you a live example, because this is very abstract. One of the decisions we were making this morning, is my team and I are like, well, should we build this new product? Does it make sense for us? And we went, okay, so what do we know about this market? We know it's very closely tied to bookkeeping. Okay, that's a check. Who are the current players in the market? It's player A, B, C, and D. How much share do they have? How long does it take to switch this software in the market? And then once you start going that, you can start, okay, if it takes long to switch the software and we have low ability to build something that is differentiated, then maybe the answer is no. So you start from that perspective. So that's one. The second thing is, I'm a big fan of, having been through Google, having learned the Google way of experimentation. I'm going to go back to something that Bezos said. One-door decisions are very different than two-door decisions. And if you can move in a two-door decision, you will actually get more information. Even in a one-door decision, you are not you may feel like it's a one-door decision, but the chances are you can move forward without it being a one-door decision, get more information, and then you can change your mind. The trick is, I think the people that, the guidance I would give people is, it's okay to change your mind. You can't change your mind on everything all the time, or your team will spin. But there are decisions where you will be like, I'm making the best decision in this minute, given the information I have, because it's better to move forward than sit here. And if my hypothesis on these few things does not turn out to be correct, then I will go change this decision. But I know if it's a two-door decision, I can change it whenever. If it's a one-door decision, I know I have till this milestone, and then I'm kind of stuck.
Now we hear from Pedro Arnt, CEO of dLocal, a multi-billion-dollar global payments player. Also, Pedro is the former CFO of Meli, a $90 billion public company.
I was hearing the whole debate a few weeks ago around Brian Chesky from Airbnb and his whole talk that no one was there, but everyone's now read about it around the professionals told me to do this. It fucked up the company. So I reflected a lot of that, because I said, wait a minute, am I the guy he's talking about? And I said, no, wait a minute. I don't think so. I think I've been through founding of companies. I was side by side with Marcos for many years, and I'm acutely aware of what to do and what not to do. But part of, I think, my reaction to what Chesky was saying was, there is a roadmap when you're inheriting someone's company than when you're him or you're Seva and it was your company. You don't try to emulate, because if you try to emulate, there are things that only a founder can do because of the understanding he has of the company, because of the dynamics he has with everyone at the company. And so I was really keen to understand. So I talked to like 3 or 4 people who had been through that process, and I got a lot of different advice, all of which was useful. The one common thread that ran across all of them was, you are going to regret that you took longer than you should have in making some decisions. So I thought, okay, if I'm hearing this from everyone, then I'm going to avoid that. And I didn't avoid it. I look back now and I say, there's a lot of stuff that my intuition told me 2 months into the business that I've held back a year, and because I wasn't sure. And now I look back and it was exactly what I thought 2 months in. But I think there's also a reason why you do that, is when you start moving things somewhat more assertively, you really need to make sure that you're all in. And I realized that when I was talking to another CEO who inherited a company from a founder, and we were kind of going through this, and I was saying, this concerns me. And he looked at me and he said, the one thing that's concerning me as I hear you is you need to have tremendous conviction in that entire change program that you're pushing. Because if you're not fully convinced, then it's going to be difficult. People will smell the doubt, and change is always difficult. And that's when it clicked for me. I said, okay, so it wasn't about whether I knew all this 2 months into the job. It was more about, after a year on the job, I have tremendous conviction that this is where we need to go. So when you have naysayers, when you have doubts, when things don't work, because lots of times you're doing the right thing and short term it's not working, at least my conviction level is very high to say, I really know this is the direction. And so we're going to keep going. There's got to be a better way to do that. And so I went to the literature. Actually, a lot of the literature I found was pretty taxative, that the worst is a non-structured interview process. That'll get you nothing. A structured interview process is a little bit less of a crapshoot. Work samples are apparently a little bit less of a crapshoot than a structured interview. And remarkably, when you ran the regressions, what other people that had spent years working with these people you're about to hire had to say about them is by far the least bad predictive element. And then when I read that, I said, this is so obvious. I mean, it's evident if you work it back. The issue with reference checks is A, they can be a little bit cumbersome, but most importantly, and especially in Latin America, they're almost done as this check. The guy isn't psychotic. But and even more so, I think in LATAM, there's this understanding that when you get called upon to give a reference check, the last thing you want to do is complicate the poor person who's about to get a job, because it's considered to be the last piece of a process where he's practically hired. And so it's not so much about the great questions I ask, it's how do I set the stage very early on that I'm able to try to break that barrier of I'm just going to sort of get out of this in 10 minutes without sinking the person, right? So it's just saying, look, I really need very honest feedback. This is in the strictest of confidence. It's making sure you're not just going to the people they gave you. It's to find the right sample set. And then most importantly, it's making sure you ask, what are the strengths? There you do a structured interview almost. What are the weaknesses, right? And what issues did you have with this person? But if you can get the person to basically think, okay, he really wants an honest take, and I'm going to give it to him, and I'm not going to feel guilty about it, then you've accomplished that. And again, just think about it, going back to the beginning. It's so obvious that someone who's worked with someone over a 3 or 5 year period will have pretty much all the insights you need to determine whether it's the right person or not.
Next is Eric Poirier, CEO of Addepar, a global wealth and asset management platform with over 5 trillion in client assets managed on the platform.
We had a very large wealth management firm, this is back in, I want to say 2017, 2018, make a huge bet on us. And we in turn made a huge bet on them to say, look, we want all of our teams, all of our end clients to standardize on Addepar as our core platform. And the combination of their number of accounts, their number of advisors, number of clients, et cetera, it's like 20 times larger than our overall client base at the time. And so, again, it was a, bet the business type of moment, but not just on that one firm. It was more bet the business that we can scale this business by growing from serving just single family offices and RIAs to also serving banks And that's going to benefit all of our clients because we're able to process much, much more data in a much faster way. But that, again, required a super deep investment in the underlying platform, in the cloud infrastructure, in the security, really just to pass muster, with banks. And fortunately, we did make that bet at that time. And that's one of the reasons today we have, many of the world's, largest banks as clients. We were very transparent about it. We said, look, it's risky business on both sides. And ultimately that's, there's a sort of trite, language around partnership and so forth that people can bandy about, but then there's also a very real version of partnership. We're, in that case, the client was making a risky bet, but with the understanding that, okay, they did their diligence on us, on our team, on the caliber of talent we had, on the roadmap we had, on the investors and the funding and the pedigree, what we had built before. They went deep. It was not a hasty decision on either side, and we did the same level of diligence on them. And so it was simply, again, with the most senior people on both sides saying, this is going to take time. And there are going to be moments in time where this is going to get really hard. And we both have to keep leaning into it, shoulder to shoulder until we're done. And we're not doing this with a second firm. We're doing this with you guys. And you're doing it with us too. Yeah, and we'll get to the other side of it. So long as as we maintain that focus, so long as we're hyper transparent in where we are, what we're executing, what's next. And so just having that level of alignment up front, in really just mutually committing until the job was done. My very initial impression of Palantir was in early 2006. And when I met the team at that point, and I saw, early versions of both the intelligence and defense platform as well as the finance platform, what was immediately clear is just the caliber of software engineering talent was completely unlike anything I'd ever seen before. I spent about 6 hours in Palantir's office at the time. It was this very small office on Sand Hill Road, or on Page Mill Road rather, in Palo Alto. And I remember walking out of there and I told my then fiance, now wife, I think I was just in the Matrix. That was unbelievable. And I have to join this company. And so I ended up, taking I think an 80% pay cut versus what I had at Lehman. Cause, as with most Silicon Valley startups, they're not exactly paying much cash, but you get a bunch of equity. But I just, I think that I mentioned that just because, the mission alignment from the beginning, the caliber of the software engineering team, and the kind of motivation for starting Palantir in the first place, in large part was after the 9/11 Commission report came out, it was pretty clear that there was information that was knowable in advance, and had that information made its way to the right people in a timely way, using a really secure technology platform, perhaps the outcome would be different. So that was really the hypothesis. And the reason why Palantir, even in the early days, also branched into financial services is we saw the problems as isomorphic in the sense that you had a lot of different data systems that weren't really designed to work well together. And so if you built much more powerful, robust software on top, basically to pull the data out of these various systems, map it to an ontology or a taxonomy that's much more useful for decision makers, regardless of the domain that they're in. Again, it's a way more kind of complete way to make high quality, consequential decisions using the richness of information that's coming from a variety of different places.
Next up, we hear from Nigel Morris, co-founder of QED and Capital One. QED is a fintech VC with over $4 billion in assets under management, and Capital One has a current market cap of almost $70 billion.
If I look back over the years, I think that it would be obvious to say the odds of success of any young, talented entrepreneur that sits opposite you when they pitch you is small. Is it 1 in 10? Is it 1 in 20? Is it 1 in 5? Who knows? And it depends on where they are in their journey, have they done it before, etc. But it's low odds. Now, they don't believe that, because if they believe that, they wouldn't be sitting there. They go do something else. And they've got to be possessed. You look for people who are possessed. And I think I have my own demons on my own shoulder. I'm looking for people that are not just brilliant, not just obsessed with making a difference, not just obsessed with the product, but have the ability to, when it fails, when it doesn't work, to think in terms of decision trees, to dust themselves off and go at it again. That is really important. So you're looking for some notion of tenacity. And candidly, people who have gone to great high schools and then cruised into Ivy League schools and all ended up with distinctions and then went to Goldman Sachs. These are the elite of our world. Many of them have never seen or touched failure. So you're looking for people that can power through that they have some kind of energizer bunny in them that will take them to the next level as well. 2, you want people that can build team around them and that can find people aware enough of what they are, what their superpowers are, and look to augment their superpowers with skills and competences that create a gestalt of capability beyond what they are. And I love finding 2 people in co-founder arrangements. One who's more strategy and extroverted and more passionate about a vision of solving a problem, and then somebody who's more technical and analytical, who can build the capability behind the person who steps out in front. That is usually a really powerful combination. And then you're looking to see if they can get along. And not only get along in their existing framework, but can they get along 6 months from now, 2 years from now? How long do they have the flexibility in their own personality to be able to grow together? And if I look at Rich Fairbank and I grew up in strategy consulting and then at Signet Bank and then at Capital One, the whole total number of years was something like 18 years we worked together. We went through very different stages in our career and our evolution from when I was basically my middle 20s up until in my middle 40s. And then Frank Rotman and I have worked together since he came out of grad school. So he and I think have worked together for 32 years. So you're looking for relationships that can stand the test of different stages. That, I think, is really powerful. I look for people that listen. We've made 200 odd investments now over 17 years. And very seldom do you see a business that is truly magnificently unique. We've seen parallels, we've seen analogs, we've seen versions, and it may be a unique combination in a different geo, but we've seen these. So you're looking for people that are listening to QED when we say, we've seen that before and that didn't work because of this. And we saw that and that did work. Now, how do you combine that with this? That are listening and absorbing. If they are thinking so linearly, they're going, yeah, just give me the money. That is a pretty big red flag. And it's a process of self-selection. I want the people that would say, you know what? I think these QED guys are going to challenge me in ways that others won't because of their experience and expertise and because it's their model. Venture is not stock picking. It's not, here, Miguel, here's a bunch of money. We really love you. We love your idea. Here's 100 units of money. Will you come back, please, with 300 or 400 and we'll all be happy? Bring me back 1,000. Venture is not that way. It's hands-on and it's building the recipe and then helping cook the meal. And I want people that are willing to share that journey in a way that's productive and beneficial to both entities.
And finally, we have Jack Zhang, CEO of Airwallex, a $5 billion payments and treasury giant that serves over 100,000 clients worldwide.
Yeah, I think the best founders I've met around the world can both go wide and go deep. And I also require my direct report, the leadership in Airwallex can both go wide and go deep. There's a lot of people, once they become managers or leaders, they become this they have this generalized skill set. They kind of can do everything, but they can't go deep in many things, which probably doesn't really work at Airwallex. So every leader here in Airwallex need to be an individual contributor first. For example, if you're an engineer manager, you need to be the best engineer in the team. And also you're able to communicate, with stakeholders well. And then you have a sense of building product and then sense of customers. And then you become the engineering manager. But, before you become the leader in a company, you have to be the, one of the best coders. And that's generally our philosophy. And And that's been the philosophy from day one. And we just keep the very high bar that every single leader in a company can always go deep. I think the impact of AI going to be a lot more on the software side than the infrastructure side. I think end of the day, money movement is moving a dollar from country A to country B. The ultimate experience is real time and is free, which we already achieved that, right? We're moving, more than close to actually $200 billion this year. And we, that 80% of over 80% of the transaction going to be real time. And we're doing that for customer for free right now. So, a lot of people kind of challenge me on blockchain or crypto. My answer is you cannot be faster than instant. You cannot be cheaper than free. So what problem are you solving? I think, on AI, I think the biggest impact is on the software layer, and also the operating of the company. So, that's different Copilot that we are building in Airwallex is that, you can have Copilot running code faster. You can build a much better customer support. You can have, AI assistant almost for every single role in a company. You could have a tech support AI that, for example, I'm a new employee. I started in a company today. I can't find this stuff. I don't know how to install this software. I just asked the tech support AI. Right, how to get me better onboarded. I'm a salesperson. I wanted to understand the product of the company. Then I just asked the product AI to kind of give me broader knowledge that that I used to have to spend days to figure out where those information get located, and you have to kind of ask your friends or your colleague in the company to kind of tell you where that is. Now the AI can do most of the work for you. So the learning curve. It's become much shorter, the efficiency become much greater.
Now we hear from Rujul Zaparte, CEO of Zip, a leading SaaS and fintech platform recently valued at $2.2 billion, focused on procurement and spending software.
So what the bomb test was, and to be fair, it was written pre-COVID. And so back when people were all coming to the office, and the bomb test goes, if everyone at the company is in the office one day, including the founders, it's very morbid. And a bomb goes off and everybody at the company perishes, including the founders. On the 1-year anniversary of the date of the bombing, is the company's revenue, its ARR, the same, less than a year prior, or more than a year prior? And the correct answer is more than a year prior. And if you think about it, what does this mean? Well, it's a test to help ensure you don't have a services business that looks like a software business, right? If it's a service business that looks like a software business and you have no employees, the revenue will go to zero. That's a very simple test for services. 1. 2, it's also a test for, many businesses have natural tailwind. A great example of this is probably Stripe, right? Stripe makes money for every card swipe. Generally, economies in the world grow, and generally companies grow, and generally there are more swipes next year than there will be swipes this year. And that kind of pattern, generally speaking, holds. And so you have this amazing and incredible sort of tailwind in the business that just kind of lifts it, that lifts net revenue retention, that lifts growth. And it's just easier to create success when you have tailwind. It is just that much harder when you have headwind. And so that's kind of the second sort of point of validation for the bomb test. If there were 2 competing organizations, right, and one was very slow, but very thoughtful, spent a lot of time trying to figure out their product and who to sell it to or whatever. And there's another company that just works harder and just tries many more things, though they might be wrong. Which one would I bet on? I would certainly bet on the latter. And that's what I'd like to think the culture is like at Zip. And that's why I care so much about velocity, because I just believe that if you iterate faster, you will learn faster and you will get to the right answer faster, because the probability that you get to the right answer on the first try is generally just low. You're going to be wrong. And that's fine. Be wrong, learn from it, and try to be a little bit less wrong the next time. And if I don't lead, and Lou and I don't lead with velocity, then the whole organization slows down. And I think that's true for any company. The thing we can't get back is our time. And we want to make sure that what we work on, it's going to be the idea that works. And we decided the first 10 customers we sell, we would like to sell them cold. Not a referral, not a friend of a friend that feels obligated to meet with us, we would just sell the first 10 customers cold, and we would charge real money for the product. And if we could sell them cold and charge real money and people would pay us, well, then that would mean that we are much more likely to have some notion of product market fit and demand in the world than not. And so that's what we did. The first 10 customers that we closed in 2020 when we started Zip, we reached out to them cold. We reached out to them via email, on LinkedIn, and we sold them cold. The core belief I have is that everything degrades, unfortunately, over time. And so as a founder, you're always fighting to help your company move faster, right? Like the more people you add into the organization, whether you like it or not, you create more process, you create more bureaucracy, whether you like it or not, you do. And it means that things slow down. And so you have to do everything you can, every ounce of energy that you have to expend to drive velocity, to drive attention to detail, because all of those things otherwise simply just get lost.
Thanks for tuning in. I hope you enjoyed this amazing episode. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, YouTube, or wherever you get your shows. It helps and means a lot. And if you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Signing off, till next week, I'm your host, Miguel Armaza.
The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.